Good morning. Good morning. How is everybody doing this morning? JTW here, Tuesday before Thanksgiving. Hope everybody's doing well. Getting ready for a marathon of of food, which I'm sure is what we all have ahead of us here in just a couple of days. So, was able to stay local. I thought we were going to wind up traveling, but we decided to just kick it here in our hometown. So I was able to hop on this morning and do a quick live stream session for anybody who is still around and trading and kind of staying a little bit active and on top of things as we head into the Thanksgiving holiday on Thursday. So yeah, I'm sure it goes without saying, but just a friendly reminder, no live streams or anything like that on Thursday. I'm sure I will have my hands full helping out with all the things I've got going on in the kitchen, I'm sure, or will have going on in the kitchen, I'm sure. So, with that being said, let's talk a little bit about where we are seeing things at in the markets. We'll talk about our trade plans that we have outstanding. We did a few over the weekend, those being SoFi, HIMS, and Apple. And then last Thursday, we did Pinduoduo, Mongo, and Intuit. So we'll go and do some quick reviews on those, and then we'll get to some new trade plans to kind of close out the month of November, really, because by the time we come back, well, I guess we'll have Friday, but after this week, I should say, and our next live stream won't be until December. So anyway, with that being said, let's dig in. Markets kind of, making some interesting moves. Opening gaps, filling gaps, trying to push higher. We still have this same supply zone overhead from the current all-time highs on the markets. We came up and tapped the bottom of that supply zone. We've talked about that previously. That's where we would be expecting rejections and key resistance in place until we clear through that entire supply zone. So continuing to keep an eye on that 60-41 level as kind of like a current ceiling that we need to break through. It does look like we have a little bit of an inverse head and shoulders pattern forming here. What's up, Navy Plum? Good morning to you. Hope you're doing well. Neckline probably looks a little bit like that. So we're essentially rejecting it right now. We wouldn't need to push much higher. We'd need an hourly candle to close somewhere over 60.25. And maybe that head and shoulders pattern, inverse head and shoulders pattern, plays out for another test of that supply zone. But again, one rejection already of this supply zone that we put in back here. We've talked about a couple of times on live stream since. 333 is crossing over the 200. I don't love that. That means the 200's been on a downtrend for a little bit. Overall, things still looking, I would say, moderately bullish as long as we hold over 59.67.25. Really strong confluence right there with Neptune, a moving average not too far away. And of course, that's an old fib extension level, but we've already kind of played around with that range and established it or fleshed that out a little bit, I would say, as a potential support and resistance area that we'll want to keep our eyes on. So right now, I would say, expect consolidation. We could see that get tighter and tighter before we do see a release in one direction or the other. But right now, the key levels I'd be watching for, again, is, a break of 60.25 to maybe see this inverse head and shoulders play out. That could potentially test the current all-time high up there at 60.53. And of course, if we break down below 59.67.25, I think that does open up potential and room for more downside, probably at least a test. What did I say? Did I say 59.67.25? That's what I meant to say, if that's not what I did say. With a potential test there at 59.44, and then I think below that we open up a decent more room for an additional leg down. There we go. Let's get our words out this morning. Down to 58.93.75. So anyway, that's what futures looks like to me. Keep your heads on a swivel. We will probably, I would imagine, start to see volume dry up. Markets are closed on Thursday, so we might see things kind of slow to a crawl today and tomorrow and Friday. as we head into the last month of the year. And then December will be very interesting to see how folks start to position themselves for 2025. So with that being said, let's dig into our trade plans from over the weekend. We did member selected tickers. SoFi so far has been a no trade, came near our put entry support level there, bounced yesterday. Looks like it's showing some signs of breaking down in the extended trading hour session, but already getting bought back up here pre-market. So, again, over 1548, I would say looks like support still holding. The other thing I'd say is we could potentially see an earlier entry from here above 1580. I think that would give room probably up to 1611, and then a test of that call entry up at 1648. So there's still some resistances in the way there, but a potential earlier entry. And then over 1648, I think, things really open up. So could be a good spot to maybe take like a nibble, start with a couple of positions, and then add if we get a break over 1611. I think over that, continuation to the upside gets a lot more interesting. What's up, new trader? We seem to be recovering so far this morning pre-market. At least a little bit. That's market's doing market stuff right now. SoFi again, flirting with potentially breaking to the downside, but also I think potential earlier entry opportunity kind of making itself known here over 1580. HIMS, we talked about this one in the chats yesterday. This one absolutely exploded. We got a very quick, our low of the day was 2637. The entry level there was 2638. So this was an open above, very quick back test, and then absolutely just launched to PT3. Found some resistance there, so not surprised. Flipped PT2 from resistance to support that we saw there, and then ultimately flipping PT3 to support and continuing higher, coming back for another test of PT3 and the 200 SMA here on the 5-minute as support. So as long as 2974 continues to hold, HIMS could try to continue to grind higher, and then we're essentially now into full-on fib extension territory. So I've got some old fib extensions from the last time we looked at HIMS. We've already seen this particular level here at 3042. Excuse me. Back test a few times as support, and not seeing anything clean yet on the, that's kind of a little quick resistance touch. So again, we projected this level out, I don't know, I think a few weeks ago. This is the first time HIMS has tested that, and it's already finding some support resistance touches. That's what I like to see. Also holding this back test of 2974 still, I like to see that. So we could potentially see this take a shot at 32, the $32 range, especially if it can break over that high yesterday of 31.45. I think that's the next logical step. Also a little bit of a psychological level, and then on up to those additional fib extensions overhead. But overall, this plan played out like a beauty, just straight out of the gate. So it was a little bit quick to catch it, but the opportunity was there. Apple, another one that kind of just, this one definitely ran too quick. I mean, it was literally straight up and through with no back tests to PT1. We did get a little bit of a back test there as things kind of pulled back. Started making lower highs, though. That ultimately pulled things back down to the 333 SMA. Here on the 5-minute, we talk about this one a lot. Found key support there, and then ultimately launched off of it there going into the close. I didn't see, and I haven't also really looked that hard to see was the whole spike there on Apple just because of the visit to China. I'm not sure, but anyway, big spike there going into the close that came out of nowhere from the looks of it. Ultimately, kind of no coincidence. So charts precede the news. We say that a lot. Looks like it really kind of just launched off the 333 SMA there. Also looks like we're trying to flip PT1 from resistance to support here pre-market with VWAP hanging out just below it. So if you're currently in Apple, as long as we're holding 233.02, this one could continue to push higher and try to give us PT2 here. It does seem to be rejecting this daily level a little bit at 23.39. So yeah, I'd say even better confirmation over that to take it up to PT2 and potentially continuing through the rest of our upside targets for this trade plan. If you've got time, would you be able to take a quick look at Sound? Yeah, that's what, Soundhound or Sound, who's that? Is that right? Soundhound, I think is what that is. Yeah, we could take a look at that. That's one that actually popped up on one of my scanners recently that I was like, man, I haven't looked at that name in a while, and it wound up running like crazy. Yeah, we'll take a look at it for sure. PDD, Pinduoduo, this one was one that we did last Thursday on the live stream. So now we're getting into last Thursday's live stream plan. So we did this one Thursday, held that put entry going into the open, and then we saw Friday we got the breakdown below. Let's see if they gave us any back testing inside that 15-minute candle. Yeah, perfect, right? This is the kind of setup we talk about all the time, right? 5-minute close below, back test rejection, that is your entry, right down to PT1 for puts, down to 98.38 with a quick move there. That paid well. And then 98.38, I think, yeah, that wound up being pretty close to our low of the day there. So after that, or since then, we have tried to recover some more on Pinduoduo. It is moving back above the moving averages, probably at the very least going to test 101.91 as resistance today. We'll see what happens there. Potential re-entry on shorts there, so keep that in mind. But yeah, great breakdown, back test, and pushed straight down to PT1 and very close. What was that? Low 98.26. We were 12 cents off of the low a day there with that PT1. So great support call there. And PT1 might be all we get, especially when you see a green line on my chart. Those are weekly levels. So those can be, pretty tough levels to break. So if we've got one as a price target, scale out heavier all and definitely aggressively move up your stops. Yeah, I'm totally fine with Wolf getting a sign this week. It'll be maybe a little bit below. Well, currently it's sitting a little bit below what our net cost per share would be, but I think we're well within a reasonable range of that. I think, again, we'll wind up with, about $7.18, I think it was, net cost per share on Wolf. So, even if we sell a $7 call and get paid 50-60 cents for it, we'll be... Why does that? Wrong layout. That's why. Let's go to... I was like, where's my levels for Intuit? So yeah, I'm okay with Wolf where it's at still. It's not ideal. I mean, preferably we would take assignment at like 780. So we'd wind up with a 718 that's net cost per share plus, so we'd be ahead essentially at assignment, but we're also not like so far removed from where our net cost is going to be that I'm too concerned about anything at this point. That is the risk we were willing to accept when we sold those contracts. So green lines, I'm sorry, yeah, I got a little bit distracted as I was making my way through the... Wait, did I lose one of my... Sorry, let me just make sure we've got Pinduoduo. Oh, that's right, this should be MDB. Never mind. All right, sorry. Getting myself back on track here, going back to answering the questions in the chat. What's up, Chris? Hope you're doing well. Good to see you there. Good to see you everywhere, brother. You are omnipresent, which I am a fan of. The green line comment, these are weekly support and resistance levels. So I mean, it depends on what side of the price, of what side of that level the price action is on, whether or not it is support or resistance. In the case of Pinduoduo, it was support. We flirted a little bit below it. Here, that could be, I'm sure if we look at like a higher time frame, like the 15-minute or maybe even the 30-minute, probably looks like a bit of a liquidity sweep, I would imagine. I mean, it still looks pretty good. Maybe the hourly. No, that kind of looked like a fairly convincing, although it was pre-market. I don't know how Pinduoduo performs pre-market. No, that wasn't pre-market. It was, I thought so. Yeah, I mean, I'm surprised. It looked like this was breaking down for sure. So yeah, maybe a little bit of a bear trap, a little bit of a liquidity sweep below before it bounced. I mean, ultimately it's a weekly level, so as long as it closes the week above that level, which I guess if we did go look at the weekly, that would look like, yeah, a liquidity sweep. So, you know, there's that too. I thought we would probably see it on a smaller time frame, but yeah, looks like a liquidity sweep. Ultimately, that weekly support held, as far as the weekly chart's concerned, but green levels on a lot of the color coding on my charts, to kind of just answer this question real quickly, is based on time frames that I'm drawing my levels on, and green levels are weekly levels as far as like how I do my color coding. So if you see that, especially if we've got it set as a dashed line or as a price target, I'd say that that's kind of a doubly significant. And so in those cases, if you see that in a trade plan like we see here on Pinduoduo, that's a sign to scale out pretty heavily and aggressively move your stops up to make sure that the remainder of those positions, you don't let a green trade go red, essentially. So hopefully that helped you out there, Trading Dad. So anyway, we talked about Pinduoduo. We're on to MDB. This one, let's see, let's check this on the 5-minute. Did it give us our back test? Never did give us a back test of the entry. We did have this 312.20. This is a daily level. So, you know, again, maybe I had the key level a little bit low here. I mean, ultimately the plan worked out beautifully, but ran straight up to PT1, came back and back tested that 312.20 daily level. That's where it really held up. Also had Neptune building a confluence right through there, eventually came up to that level and had that confluence there perfectly with it. Ultimately, this did wind up pushing through all of our price targets, got a little bit above PT3 there, hit that couple resistance levels higher up to 353.19, where it's seen a little bit of a rejection from there. Back below PT3, barely. See, that's the one where I don't like. I'd be a little bit cautious using the extended hours chart with something like MDB. And the reason why I say that, just to show you all this, I'm sure I've talked about this in the past, but anytime you see this kind of stuff, these little dashes kind of just hanging out all over the place, you know, I tend to kind of defer to regular trading hours just because that can create some weird anomalies and indicators and how you chart things. So just something to keep in mind. That's why I switched to regular trading hours in this particular case. So things still looking pretty bullish from a Neptune perspective. 200 SMA coming up, going to add some confluence there. So to me, as long as MDB is holding 335.72, looks like this could hold and continue to try to push higher. And then last but not least, Intuit, and then we'll get to some new trade plans this morning as we go into close out the month of November and to head into the Thanksgiving holiday. So Intuit looks to be breaking down. Let's see what happened. This was one. Oh, sorry, I got totally off track here. So we did this Thursday pre-market. Oh, this one opened. Yeah, okay, I remember this one. This one was probably almost inactionable, just because of how it moved pre-market while we were doing the trade plan. And again, Intuit's another one that you see these dashes, that pre-market price action isn't necessarily always reliable. So we were looking at Intuit kind of from this perspective. But we opened up above, never got a back test of the call entry. Ultimately ran all the way up to PT3 and rejected on that earnings report. Actually, just one more level above, up there to 681.62. That was the right 681.62. What's the high of that candle? 681.59. So 3 cents off a high a day on that daily level. So I called one level lower. Again, there was probably, I would imagine, a little bit of a debate between which of those two levels it could be. I shot one level conservative, is my guess, if I'm remembering correctly. But ultimately, that earnings report did send it down. Now it looks to be trying to break to the downside. In fact, it did break to the downside. So this could continue lower and head down towards 623.27. So keep an eye on it as far as Intuit goes. But this one, yeah, was definitely a tricky one to trade. And I'm sure this was a unknown reviews request. My homie loves those. We're on the doorstep of an earnings report trade. All right, so let's get to some of these new trade play requests. I saw Fastly and What was the other one? Sound. So let's take a look at those. Let's start with Fastly. And let's go back to extended trading hours. Kind of dashy though. Yeah. 806. We'll keep an eye on that. Make sure we're keeping that in mind as we. Brother, you are the king of the small cap trade plan. you find all the best tickers for me to chart. Are you still riding Lunar? That one, I'm so frustrated that I didn't load more shares on that, and none of my. I mean, I've made good money on selling those premiums, but I would have made more. Nice, good shit. Are you selling any covered calls yet? I would definitely be selling some covered. Still in 11C 12020. Okay, so you're in long calls. Okay, but you've got shares too, right? You sold. Okay. Well, I mean, I don't blame you. You know, at some point you got to take profit, and I think, especially where our entry was, if you were still holding your full share position at this point, I'd accuse you of being greedy. Yeah, it's been insane. That and Palantir, that's the other one that, man, my shares are just absolutely ripping. I'm actually, I didn't think I would be sweating this at all, but I'm actually sweating a little bit whether or not my $70 calls are going to wind up in the money for. I think I sold some December 20th $70 calls against my shares and collected decent premium. I think they are maybe just barely back at break even now that it's kind of consolidated and seen a little bit of some pullback. But yeah, Palantir's been absolute rocket ship since that earnings report. Yeah, it could be. I mean, it's a very I think my cost per share is like in the 40s. But yeah, you know, I'm okay with selling at 70 with that net cost per share. Ooh, man. Yeah, you know, again, unless your plan is for an investment, you know, the goal is to trade in and out of these things, right? You take one elevator up, you know, a few floors, hop off, wait for the next elevator to show up, take that up a few floors, right? I mean, that's, you know, that's the name of the game. Don't fall in love with again, unless it's an investment. Um, you know, don't fall in love with those shares. And please, please, please sell some options contracts. I mean, it's just, I make a good chunk of money every month between dividends and premiums collected, and it's all in the background to my like active trading that I'm doing. I don't have to really babysit or pay attention to it all that much. What's up, HBach? Good to see you. Buy low, sell high. If only it was that simple. Well, you know, technically it is. The where it's not simple is when is the time to buy low and when is the time to sell high. That's where it gets tricky. Timing is everything, especially with options. All right, still a huge gap to fill on Fastly here. Actually, it coincides a little bit with this weekly level, but I'm going to drop a second level on top of it just so I don't lose sight of that weekly level. And that would take us all the way up to there. So that was, I'm guessing that was an earnings report. Yep. Yeah. I don't know if you've looked at any of the Defiance ETFs. Those have been pretty interesting. to me at least. They've got a couple of new ones that are like a target income. It's like a 20% monthly return target, I think, or something to that effect. Or I'm sure it's overall 20% annual return, I should say. Via dividends paid out monthly. So they've got like QQQT is one of them. What's the other one? SPYT is another one. They also have some like 0-day sell cash secured put on like the index ETFs, and I think last I looked they'd switched those to paying out like weekly, which is a kind of an interesting approach. I think that they're paying out a little too aggressively on those. I think that they're going to have to keep reverse splitting. That will continue to obviously change the dividends as well. The dividends will adjust with those reverse splits, but it's a little too aggressive in the dividend payout for it to be something that you can kind of just set and forget. I think with those, you'd really have to be paying attention and kind of running a little bit of like a drip campaign back into that position with some of the dividends that get paid to continue to kind of average down and maintain a decent size share position. So yeah, sure, I can put a stocks watch list, sure. But yeah, check out Defiance ETFs. The other ones are like QQQY and like I think I still have some IWMY because that one wasn't paying out quite as insanely. I think I still have some of those, but when they switched to the whole weekly payout thing, and they were already paying a pretty aggressive dividend. I mean, they were paying out like I want to say like I was getting paid 80 cents a share on a monthly basis on something that was trading in the like $20 range. So, the problem was it got to the point where the dividends were being paid so aggressively that it wasn't keeping pace with how the indexes were actually moving. It wasn't recovering with the indexes the way it should. And that's when I saw the disconnect and I started to shift away from those and something to that still, I would say, pretty aggressive on the dividend side of things, but not as aggressive, not as, I would say, egregiously aggressive. So that's where the 20% target income tickers came in. And I've got several hundred shares of both SPYT and QQQT. So those are a couple that I like currently. If you're looking for like an aggressive dividend play, there's, you've always got your dividend darlings out there that'll pay you regular, pay you quarterly. It's not going to set the world on fire, but it's consistent and the share price has plenty of time to appreciate alongside of those dividend payments. So it all depends on what your goals are. Yeah, very similar to Yield Max. Yield Max had like was TSLY Yield Max or something like that. Yeah, TSLY. I had that for a little while, and it paid well for a little while, and then Tesla started to get real ugly there for a minute, and that's when I was like, yeah, this is not looking good. And I ditched those shares. I don't even know where. I think they had to like reverse split that a couple of times. I don't know how that one's paying out. That's the covered call ETFs. And those, I think the challenge you have with those is you kind of always have to have covered calls on for that strategy to work. And so you can't really, like, one of the things that I try to do, at least, unless it's, depending on where things are at, but if I see an opportunity to kind of wait before I sell my next round of covered calls, and get some share price appreciation before I lock in the premiums, which also helps you get better premiums. I try to do that, but you can't really do that with the way those Yield Max ETFs are supposed to work. So that's kind of the one pitfall of those. And so like what I was seeing is Tesla would have a big day, like a 8% day. TSLY would have like a 4% day or whatever the case might be. But then when Tesla would go down, TSLY would go down at the same pace. Yeah, SPYT and QQQT are both extremely new. So definitely unproven, but I like the theory behind what they're doing with at Defiance with those. I like that it's kind of they're doing a smarter job of any of the high yield ETFs that I've seen of trying to make sure that the dividends, while still aggressive, are not so aggressive that you're constantly kind of upside down on the share price. I think that they are trying to kind of hit that sweet spot of your shares are kind of very slowly but surely appreciating, but you're getting paid, so while you're not getting the share appreciation, you're getting liquidity, and that liquidity is constantly being recovered by the share price kind of grinding back up. So, that's the theory, at least. All right, so sorry, I'm getting a little bit into the weeds with Fastly here, but apparently I thought I had done a Fastly trade plan at some point in the past, or done some levels at some point in the past, but I had nothing on my chart, so I had to kind of start from scratch as I went through my little dividend spiel there. All right, let's take a look at this. Let's kind of fast forward. But I hope, anyway, that that's kind of helpful information. Again, set up those passive income trades or share positions. And then you can use that income that those generate, whether that's the premiums you're collecting from selling contracts or from dividends, whatever the case might be, to then fund your options buying or futures trading or whatever it is you want to do. I personally dabble in all of it. It's mailbox money, right? Just shows up. It's as passive can get. All right, sorry, I'm really kind of debating how I want to handle this Fastly plan here. I think, yeah, all right. So we're going to let it get into this regular trading hours gap. I'm going to use this kind of current resistance as our stop loss average down. Question is, I think anticipating a full gap fill. It's clearly not realistic. Gotten very close. What is that? 939. I'd want that to be a little bit closer, though. Do you have a level here at 924? Let me just take a look at this. Last time it ran through this range. It's either 924 or somewhere in between there and 947. Yeah, I think let's take a shot at 947. Maybe I'm shooting a little too high, but it looks reasonable to me. All right. So again, I'm not expecting just a straight up rocket ship up through this gap. So let's kind of see where our other potential key levels will be. Yeah, I like 1014. If we continue above 947 and then 1072. If you're riding shares, I would say once you get to 1072, move your stops up to like 1014 or something like that and see if it runs for 1258 and just set it and forget it. I mean, you'll lose some money given back down to 1014 if you want to take a shot at that, or just scale out at 1072. There's potential though for a gap fill up to 1258, so that would be a nice return on investment from a shares perspective if it does finish that move up and fill that gap. Might have this weekly level just a little bit high right there. All right, so where does downside get truly interesting? I think it's going to be below 768 level. I think that that does open up room down to this weekly level. 789 is kind of an aggressive stop. I think that there's an hourly level that I can fill in the blanks with right here. Cuts it pretty close to a 1-to-1 risk reward, but kind of just is what it is. I think 789 is just too tight of a stop loss. What's up, Teller? Do you recommend anything for this ticker? Do you just do iron condors? No. So when we're doing these trade plans, these are very much directional plays, and if anything, kind of the opposite of what you would want to do with an iron condor. Man, iron condors, that's a whole nother subject. I haven't dabbled with those in a while, but man, back in the day, it's your risk reward is upside down, right? But your odds of success and odds of getting paid out are, from a percentage standpoint, very high. But if anybody has played around with SPX iron condors, that is a really intriguing strategy. God, it's one I actually forgot about until Teller showed up and asked about iron condors. I was like, and I got out of it. I think I stopped doing them around, what happened? Maybe it was COVID. Something happened, or maybe it was something leading right up before COVID. It was sometime around that point in time, though, because the index volatility was just so through the roof that you were getting knocked out of at least one side of the iron condor, which, based on the strategy that you're using, or that I was using, I should say, when I was doing those, was, essentially if I was going to collect 50 cents per side on an iron condor, I would set my stop to be at 150, right? So in other words, like if I hit the negative 150, I've already collected 50. So essentially it's like a 2-to-1 reverse, right? I'm either going to take $100 loss, or I'm going to make $50 per side. Now, potentially you went on both sides of the iron condors, especially Wednesdays were great for that, back when 0 days were only Monday, Wednesday, Friday. But, sorry, I kind of try to do 10 things at once here. So it got to the point where, I was getting knocked out kind of too frequently. And, using the same strategy that had worked for, over a year at that point. Just kind of the market changed, and then we wound up with every day 0 days. And, it's actually a really intriguing idea to circle back to that, especially with 0 days being every day now. Because it used to be a kind of an effective strategy, mostly for Monday, Wednesday, Fridays. You would try to base some of the anticipated move off of what ADD was doing, but again, that can kind of be a little bit of a misleading indicator. Anyway, if anybody's interested in getting into the weeds of that, because those are some deep weeds, feel free to DM me. It's probably a conversation that most people aren't interested in, and a strategy that most people will never attempt to execute. 0 day means your contracts that you're selling expire the same day. So like Monday, Wednesday, Friday, you would do 0 day iron condor, starting off with, selling a put or credit spread based on some different factors. You start off with one side or the other. Some days you just stick to like only selling that credit spread. If it's moving too directionally, you don't try to catch the other side as well. And there are, again, some factors that you use for that. But then, the goal is to try to sell your put credit spread near the low of the day, sell your call credit spread near the high of the day. Ultimately, still requires the same amount of buying power. Yeah, it's a very involved process, but can also be great background money. It's just it takes a little bit of like additional explanation and deeper understanding of how multi-leg options strategies work to get into that. But happy to talk about it anytime if anybody wants to get into that conversation. All right, so let's get through our Fastly live stream plans here as I get back on track, and then we'll try to take a quick look at what was the other one. Not PLTR. We Soundhound. That's right. Okay, so what are we looking for here on Fastly? We're looking for a break above 879, confirmed break above that. Then we're looking for targets at 947, 1014, and 1072 with a stop loss average down at 837. To the downside, we're looking for a break below 768. That should bring targets at 725, 676, and 624 if we get that confirmed break below. And we've got a stop loss average down on the downside trade plan there at 807. Those are your Fastly upside and downside trade plans. Go get them. All right, so let's take a look at Soundhound. All right, so I can walk and chew gum sometimes. it's hard. Trust me, I definitely got into the weeds of what I was saying and like not paying as much attention to what I was doing with my hands for a minute there. So, yeah, I appreciate the compliment though. it's, if you get me on the right subject, I can kind of put my brain on autopilot and just let it, let my mouth run. Oh gosh, let's see if we're gonna have this on the extended hours or not. Yeah, that actually looks okay. Well, do you have this autopilot for sale? If I should sell it to Elon. Maybe we can get some Teslas to start driving themselves. He'll get there. All right. Let's see. Yeah, we got a weekly level there. This one's kind of plays in a very interesting range, I guess is probably what I'm trying to say. Yeah, something hanging out right there. I don't think we're going to get much else relevant from the weekly chart. Just not seeing enough. Hasn't been enough price development in kind of the current range for the weekly chart to be effective. So let's see what we've got back here. IPO days. When did people start to shift between buying and selling? This is an intriguing level. Yeah, if you guys have any other high level things where I can just kind of switch the brain on and let it run while I use the other half of my brain to work a trade plan, happy to do it. Yeah, it's gonna be a tricky one. I didn't realize how young this ticker is. What is it? It's ultimately just a couple years old, not even. Or sorry, no, just over. Interesting support through there. Oh, yeah. I take a look that. Could be something there. Yeah, now that we've got some more candles to work with, this is starting to tell a better story. All right, let's see what we got. It's an interesting rejection up here. Could be nothing. Could be something. Let's see. Also $9, that's a psychological level. Nice round number. Nothing to really see there. Anything. I'd say it's a little bit above that, but we'll probably find something around one of these two levels that's going to be important for our forthcoming trade plan. Yeah, it probably is that $9 level. That's kind of what I expected to see. But you don't know. Gotta check these things out and confirm them. I do like the move though up to 998 above that level. Let's see if we're gonna have yep. It's another interesting rejection. This is probably nothing confirmed yet. I'll be surprised if it is, I will say. This was a good level, though. Kind of read between the lines on that a little bit. Let's check the hourly. There is a level here. Yes, I did. It's just above there, S little. If you need me to talk you through it again, let me know. Oh, man, I need to speed up. I still got a SPY plan to do, and we're getting close to 10 minutes out from market open. Come on, where is this price action? Sorry. I feel like this is taking forever. There we go. Could have done that quicker. All right, so is there a level here at 1055 is my question. Can I confirm that? Yeah, I think there is actually. It wasn't totally random. It's pretty loose. There's not a lot of confirmation on it, but it's there. I think this 1193 could be sitting just a little bit lower right here. That'll give us 3 price targets for the upside. Stop loss average down. What was that? 833 daily level. Yeah, it probably sits right about there at 833. Downside. I think I'd want to wait for this 200 SMA confluence to clear out down here at 704. Gives me 755 as a stop loss. First target 632. Next target, probably going to be a fill in the blank because we've only just recently started looking at this hourly chart. Yeah, right about here. 573. Below that, kind of like in 525. Based on some of this older price action, let's see if that kind of continues to be the case. This last move right before we head up. Nah, you know what? I think this third price target's a little bit tighter. I think it's 541. All right, so here we go. We will wrap things up right in the nick of time. So this one's definitely got potential over that $9 mark, that's for sure. All right, so here is your All right, so what are we looking for here on SoundHound? We're looking for a break over $9. That should give us targets at $9.98, $10.55, and $11.77 with a stop loss average down at $8.33. To the downside, we're looking for a break below $7.04. That should give us targets at $6.32, $5.73, and $5.44 with a stop loss average down at $7.55. Those are your SoundHound trade plans for our last live stream of November, our last live stream before Thanksgiving. So with that, I want to thank you all so much. That is one thing I will definitely say that I'm thankful for around the table on Thursday, is the fact that we have such a great community here at Xtrades, that you guys take the time to share some of your day with me on a pretty regular basis. I can't tell you all enough how much I appreciate that. So hopefully the juice is worth the squeeze as far as the time that you guys are putting in with me here. So with that, I want to wish everybody a very safe and a very happy Thanksgiving. I hope you guys enjoy the holidays. We will be back next Tuesday at 8:30 a.m. Eastern Standard Time to close out the last month of 2024 and get ready for what 2025 has in store for us. So with that, I want to thank you all again, as we always say here on the FOMO live stream: plan your trades, trade your plans. What was the other one, Chris? Trade plan a day keeps a blown account away, or something like that. Keeps the creditors away. And of course, keep your wins big, keep your losses small. I hope you guys have a fantastic day. Have a wonderful Thanksgiving. I will see you all next week, and in the chats in the meantime, take care. Talk to y'all soon.